Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up! The US government faces a dire fiscal situation, with interest payments on a $33 trillion debt reaching nearly $880 billion annually. This heavy financial burden raises concerns of a potential debt spiral, risking fiscal crisis or hyperinflation. Experts emphasize the need for Congress to drastically cut deficit spending to maintain investors' confidence. With the Federal Reserve reducing its appetite for government debt amidst efforts to combat inflation, the traditional safety appeal of US Treasuries is weakening. Recent bond auctions showed declining demand, suggesting growing investor skepticism about the reliability and stability of US government bonds. Europe is facing a return to austerity measures similar to those that nearly led to its collapse over a decade ago. A German court recently ruled against reallocating 60 billion euros from pandemic funds to an environmental and energy project, forcing the government to freeze spending for the rest of the year. This decision hampers Europe's economic recovery efforts and challenges its plans to support Ukraine and reduce carbon emissions. The ruling could widen the economic gap between Europe and the US and impede Germany's ability to adapt its economy. The decision also impacts Germany's support for Ukraine and EU spending, with political and economic repercussions across the continent. Peru aims to transition its debt from US dollars to local currency, particularly focusing on long-term bonds, as stated by Finance Minister Alex Contreras. The strategy is to wait for the Federal Reserve to reduce interest rates, making borrowing more affordable. Peru, currently in recession, faces challenges like social unrest, agricultural issues, and reduced tax revenue due to lower economic activity. Although annual inflation has decelerated, enabling interest rate cuts, fiscal adjustments are necessary to meet the target deficit of 2.4% of the GDP. Contreras emphasized the need for spending cuts and other measures to control the fiscal situation, acknowledging the challenges in achieving the deficit target. Brazil plans to join the OPEC group of oil-producing nations in January, but without participating in the group's output restrictions, according to Petrobras CEO Jean Paul Prats. Brazil, the largest oil producer in South America, will not adhere to OPEC's plus production quotas as it aims to maintain independence in oil production decisions. This move comes as Brazil explores opportunities to enhance its role in global energy markets. Prats highlighted that Brazil's participation would be more observational, aiding both OPEC's and Brazil's energy transition goals. The formal acceptance of the invitation is anticipated by June. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.